to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have John Molesphini, Nasdaq Global Head of Insights. John conducts eVestment's quarterly trends briefing and joins us today to talk about some of the highlights from the fourth quarter briefing. John, it's great to have you with us. Welcome back to Trade Talks.
Thanks for having me, and nice to see you again, Jill.
All right, you got it. To start off, remind our audience about where eVestment's data comes from and how they can use this information we're talking about today.
Sure. So just for background, eVestment is part of Nasdaq's investment intelligence business unit with a primary focus on institutional asset management data and analytics. eVestment tracks over 3,300 asset management firms providing data on almost 26,000 unique investment strategies. So as asset managers represent over $106 trillion in assets under management as of the fourth quarter. So investors and consultants use eVestment to review and monitor asset managers, and the asset managers use eVestment to do competitive analysis and to present their strategies to investors and consultants around the world.
So, John, what are some of the big trends you saw in the fourth quarter?
Yeah, so fourth quarter obviously was pretty volatile. We need to consider that Omicron and its spread created significant market volatility and may have actually impacted asset allocations and thus the subsequent flows that took place. Starting in North America, where we see investors located there, probably the most noticeable piece of what we saw in the fourth quarter isn't which universes actually took in inflows, but which ones weren't there. After multiple quarters of being on the platform for flows, the active U.S. core fixed income and U.S. core plus fixed income both fell off after being there for multiple quarters and in fact multiple years, whereas we did see net inflows to passive core fixed income. So a little bit of an interesting thing there to note active versus passive. Of course, it's interesting to see continued and accelerating inflows to the TIPS universe as the U.S. Fed embarks on changes to policy to raise their interest rates amidst rising inflation. And then on the net inflow and net outflow perspective, some universes are seeing continuations of multi-quarter trends. The main exception there is the large net inflow to what we saw in the U.S. passive S&P 500 equity universe, while outflows of active U.S. large cap equities continued. We saw that across core, value, and growth. And that's been a common occurrence now for years as institutional investors continue to de-risk, take profits, and reduce their exposures to active U.S. large cap equities as they rebalance amidst, a multi-year, in fact, over a decade-long bull market.
And what are you seeing from other parts of the world?
Yeah, so we have the ability to track this information globally. So starting first in EMEA, most of the large net allocations by investors were continuations of multi-quarter trends. So within EMEA, it appears that investors from the Netherlands were the main drivers of inflows to universes, and 4 of the 5 largest net allocations were to fixed income. Now, the net outflow perspective shows a little bit of a different change. We either see some adjustments to mid-year or end-of-year trend shifts. Specifically, global large cap core equity shifted to significant net outflows, while global all-cap growth accelerated its mid-year negative trend shift. We also see the asset-backed Europe fixed income universe also reversing a 3-quarter trend. And then let's move over to Asia. The Asia Pacific region was similar to North America in terms of consistency in the fourth quarter versus the rest of the year. However, we did see interest there in U.S. large cap growth equity, which is important to note for managers and investors in that universe because that's the opposite of what was taking place from U.S. investors. So here's a situation where you have Asia Pacific investors allocating to U.S. large cap growth, U.S. investors allocating away from. And in fact, we can see of the investors allocating to, it was primarily driven by those in Japan. The net outflow perspective shares not just consistent themes from Asia Pacific, but also similarities to EMEA in the form of outflows from U.S. corporate fixed income and active global equity. So it's always important to consider regions of the world, whether you're an asset manager or an investor, in terms of what the others are doing.
And what have you been seeing with flows to ESG strategies?
Right, the big topic everyone's talking about and something we track almost every day. So eVestment's database has an ESG-focused universe. These are strategies that are singularly focused and dedicated to ESG as their primary investment thesis. So while we can also analyze the tens of trillions of dollars among strategies that claim ESG integration to some degree, that's not what is reflected here. As ESG is not the primary focus for those that just kind of claim integration, it's difficult to determine if the flow activity among them is due to ESG or other factors like cap, style, region of investment, et cetera. So therefore, when we look at the information, we show the flow data for that ESG-focused universe, the dedicated strategies. And while it's still a relatively small universe overall in terms of assets under management, this universe continues to be a dominant source of net inflows from around the world, as you can see, and assets continue to rise, reaching almost 1.5 trillion now among these strategies. Now, obviously, strategies that can clearly demonstrate commitment to ESG are winning opportunities and mandates. Outside of just overall broad flows in the ESG, the other point to highlight here is the acceleration of net inflows to these strategies outside of Europe. Whereas Europe has kind of led the charge in the ESG strategies overall for a number of years, you can see the other regions are accelerating from a net inflow perspective to ESG. So something to keep an eye on there. And on the next slide, we actually view net flows for one specific universe to demonstrate the clear appetite for ESG. It was shown earlier that active global equity strategies saw very large outflows from both EMEA and APAC investors. So the green line here is for the global equity ESG focused universe, and the red bars are for the overall global equity universe. This chart shows that even though active global equity had its largest outflows in the fourth quarter since 2015, ESG-focused strategies in that universe continue to see money come in. So it's highlighting the fact that if you're focused on ESG, it's the place to be from an net inflow perspective.
And John, did you see any other trends of interest in the fourth quarter?
Yeah, so exciting for us. We launched a new D&I questionnaire in January, and diversity inclusion data was obviously important in 2021. There was an appropriate shift of interest from firm level to those actually making the investment decisions. And within those categories, the most screened diversity fields were defined specific strategies or products that had minority compositions among the investment staff. As consultants and asset owners continue to seek and utilize this information as part of their analysis, many of the managers out there are taking advantage of this opportunity to really promote their differentiated approaches to D&I and to communicate those policies and changes that they're making. And it's such an important topic that it's great to measure and see that we can see that the investors and consultants are consuming and using that information in their analysis. So it's fantastic to see something that we launched early in the year take hold and really be adopted by our client base.
And finally, where can people see more of this data?
Sure. So there's a replay of a longer quarterly trends briefing posted on eVestment.com where we highlight these trends in more depth.
All right, John, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.